Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and I want to look at FarFetch Limited. So I just want to review this trade. I think I've already talked about this in a different context when we entered the trade back here. The first breakout failed, but not by that much. So we're holding the stock at 30.10. It breaks out again, and so now what do we do? We're in right about here. Yesterday, stock was up over 25% where we bought it from, but after hours the stock kept running, and so I hung on to it. We sold half. Actually, we wound up selling the whole thing because it was just too much profit to leave on the table with the stock up this much. If I got a couple things to say. First of all, if you are still long, if you happen to take this trade with us and you're still long, this would be how I would trade it, because it's been such a heck of a move. You don't want to give it all back, and there's a chance, just by nature of this, the steepness of this slope, it's got to come back some. And frankly, even if it doesn't, how much higher is it going to go before it stalls out? So you're very, very late in this trade to be holding it. And so what I would do is look at 41.50. That's the low of the day, and I'd keep a stop just a little bit below that. Again, if you happen to be long, no, I wouldn't buy it here and keep a stop below 41.50. It's already gone. But this was the thing that I wanted to show you as far as how to stay in these stocks. Look at the intraday lows, look at the intraday highs, and compare them. Here's the intraday low. Okay, and here's the intraday highs. Here, 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 and finally here. So what's the common denominator? They're higher. Each day shows stronger buying interest than the day before. At like the weakest that the buyers were on any particular day is still stronger than they were on the prior day. In other words, they just would take the stock here, 33.50, and then the next day they're not even waiting. They'll take it at 36, et cetera, et cetera. So, you can make a case that this is your appropriate stop. But if you're using this kind of trading technique, then what you'd be doing is, okay, you see this here on the 3rd, and so you say, all right, the next day, starting then, I'm going to stay long the stock, but the next day I am going to keep my stop right here. We'll do it like this. I'm going to keep my stop right here, just a little bit below the 3rd's intraday low, and then the next day, boom, the stock's up. So what are we doing? We are keeping a stop at this one. We keep the stop here. So we raise it up, and then the next day, okay, well, once again, we raise our stop up here. So each day that goes by, we lock in the profits by saying, okay, if the stock falls below yesterday's intraday low, that means that there's absolutely been a change in the balance of strength between buyers and sellers. And this is a way that you can stay in a stock for longer. You are not trying to pick the top. You're letting the stock tell you when the top not is occurring or when it will occur. You're letting the stock tell you when the top has occurred. And the way it tells you that is, today's intraday low is lower than yesterday's intraday low. That tells you something that you haven't been told all the way up. And so, so far, here we are. And so where would you put your stop? Seriously, on Monday, you'd put your stop right there. We'll do red. We'll do red. There you go. Okay, and so that's how we're trading this. So you got your stop here into next week, and for all we know, the stock's going to keep going. So anyway, that's all I got for you on FarFetch. This has been a good trade for us. Hope you were able to make that too. And also, if you haven't tried Stock Market Mentor, I put on trades that I follow all the way through so members can trade along. We track our results to make sure that you are making money as opposed to me just doing video footage. So hope you'll check us out. First 30 days is on me.